qualifying when a customer does not have insurance is crucial to investigate every detail regarding their previous policy. Now, it may not make sense, or you may not see the benefit of actually asking them what they had and how much were they paying, or what company did they have, how long ago did they have insurance. It may not make sense why we should ask, but let me share with you. It's very important, simply because you need to understand what type of mentality do they have. I'll give you an example. In anything that we purchase, or any service or any product, if we upgrade or update, or if we obtain a new membership or buy a new product, we're always going to compare the previous product with the new product, or the previous service with the new service. Or if we're trying to upgrade, we're going to compare what we have and the other options that are possibly available for us. So with insurance, it's the same thing. So if someone that had insurance, let's say 6 months ago, and they were paying $70 a month, guess what? Most likely they're looking for something lower than $70 a month. They don't have the knowledge enough to understand that that $70 a month may not be available. So therefore, their mentality is, I want 70 or lower. See, that's what they're thinking. Now, it's important for us to understand what mentality do they have, how are they thinking, what are they looking for, and also what situation did they have before. I'll give you an idea. Some customers are going to tell you, I'm looking for $30 a month. But if we look at their history, they were paying $70 a month before, so where are they getting the 30 from? They're looking for something that they never had. So all of this information is going to help you have a better, stronger presentation. Now, let me go into details as far as the questions that you're going to ask for someone that does not have insurance. Number one, when was the last time they had insurance? It's important. What company did they have? How much were they paying? Are they making any changes from their previous policy to the information that we have today? So for instance, do they have the same cars? Do they have the same drivers? Did they have the same coverages that they're requesting? Did they live under the same address? Are there any changes so we could actually compare on an apple-to-apple comparison based on what they had before and what we're going to offer? The following: did they encounter any negatives with the insurance company or the agency? Did they encounter any bad service, any bad experiences, any situations that they feel were not appropriate or were not reasonable for them? And also, did their payment increase before the policy canceled? And then most importantly, why did the policy cancel? Why did they let the policy cancel? Because most likely they've been driving without insurance for the last couple months. Now let me go into details and elaborate a little bit why all of this information is important. Number one, the reason why we need to ask when was the last time they had insurance, simply because we want to find out the urgency of them making a decision. For instance, someone that had a policy and it recently got canceled within 5 days or 7 days or a couple weeks, this may be a priority for them. They're gonna most likely make a decision because it has not been so long that they've been driving without insurance. Matter of fact, we're gonna add fear motivation, we're gonna add urgency for them to make a decision simply because they've been responsible for so long. Let's find out how long have they had the policy, or how long did they have the policy, and we're gonna emphasize on the fact that they had a policy for a year. Now, shame on them if they continue to drive without insurance, because for a whole year they were insured. Why would they drive without insurance? This is a priority. This is something that's requested by the state of California. So their insurance needs may be more of a priority than someone that has been driving without insurance for the last 6 months. Now, someone that's been driving without insurance for 6 months, we need to find out why are they taking the risk? And you could break the ice and tell them, look, you like taking the risk. You're a dangerous guy, or a dangerous woman. Now, find out why are they driving without insurance, and why have they been driving without insurance for so long? This will also allow you to understand the way they look at insurance. What type of mentality do they have? Maybe insurance is not a priority. Maybe they need it today because the registration is going to expire. Maybe they got pulled over. So you need to find out, why were they without insurance for so long? And why are they in the office today? All of this information, we're going to use it to our benefit. We're going to use it to set up a presentation that's going to allow us to help close the deal. Now, it's very important. Now, also, within the time frame, we could also emphasize on the loyalty discount. The loyalty discount is just something we use to add value. So it doesn't matter if they had a policy last month, 6 months ago, we could always emphasize on the fact that we could add a loyalty discount even though they've been without insurance for 6 months. As a matter of fact, as long as they had insurance for the last 12 months, we could offer the loyalty discount. Or simply because they've been insurance within 30 days, we could offer the loyalty discount. But at least we're making it more realistic by knowing the time frame that they've been without insurance. Now, the following, what company did they have? Now, it's very important to determine what company they had, simply because we're going to explain the loss ratio and we're going to requote them with their previous company. So for instance, if they had Infinity 6 months ago, we're going to explain the loss ratio and we're going to requote them and we're going to give them something higher than what they were paying before. So let's assume they were paying $70 a month with Infinity 6 months ago. We're going to tell them that based on the loss ratio, Infinity is no longer offering the $70 a month. Matter of fact, now they're offering $120. But if you don't know the company, you really can't requote them, because it's not going to make sense. How can you requote someone with their previous company without knowing what company they had? So it adds value to the presentation, to the loss ratio, and to requoting them with their previous company. And the reason why we requote them with their previous company, simply to eliminate the option of them telling you, well, let me go back to my agency, let me go back to my company, let me go over there and quote, let me see what they offer. So it's very important to find out, to determine what company they had, and based on that company, you're going to do the loss ratio, you're going to explain the loss ratio, and you're going to requote them. Now, how much were they paying? Now, it's very important to determine how much money were they paying before, simply because that's going to allow us to understand what are they looking for. Now, if they were paying $70 a month, you gotta keep in mind, most likely they're looking for $70 a month or lower. So if we don't have anything lower than the $70 a month, or if we don't have anything within the $70 a month, once again, we're going to have to review, emphasize, educate them based on the loss ratio, and we're going to have to requote them to eliminate those $70 a month. So we need to eliminate the $70 a month before we could actually give them our quote. So if the lowest one we have is 90, you need to eliminate the 70 before we give them the 90. Even if we give them an approximate of 85 to 90, we still need to eliminate the 70, because if not, they're going to use it against us. As soon as you give them 85 to 90, they're going to tell you, well, let me go back to my previous company because I was paying $70 a month. And at that point, it doesn't matter what you tell them. They've already made a decision that they could go back to their agency. So it's going to be more difficult for you to convince them that the company that they had before, that the rate that they had before is not available anymore. So being proactive is one of the most effective solutions. So you'll educate them on the loss ratio, you'll requote them with their previous company. So by the time you give them the 80 to 90 or 85 to 90, at least you already eliminated, you justified, you educated them that the $70 a month is no longer available. Now, the lowest option is 90 or 85 to 90, but keep in mind that your previous company is giving you 120. So now we're creating a scenario that wasn't there before to add value to the option that we have. By giving them the 120 that the company would offer today based on today's rates, their previous company, it allows us to emphasize on savings. 120 minus 85 to 90, literally, we're saving them $30 to $40, when realistically before, you were going to tell them that the 90 is higher than whatever they were paying. But based on this method, using the loss ratio, requoting them, and giving them the approximate after, now we're emphasizing that if they go back with their previous company, they're going to be paying 120. So we have 85 to 90, which is $30 to $35 lower than their previous company. So now we're calculating the new rate, the rate that we're telling them that their previous company would offer with the option that we're giving them. So it adds a lot of value. You're able to emphasize on savings instead of emphasizing that they were paying 70, now they got to pay a little bit more. So realistically, you're closing the deal based on creating value, which is very important. But you could only elaborate, or you could only set up a presentation using savings, requoting, and the loss ratio only if you know the company. Now, also find out, are they making any changes? Because maybe they were paying $70 a month for one car liability. Now they have two cars liability. So of course, they're not going to be able to pay the $70 a month. Their payment may be a lot higher. But if you know ahead of time that their situation from their previous policy was different, you could emphasize on the fact that those $70 a month is not going to be available, is not going to be possible, simply because those $70 was for basic liability for one car. Now we're looking at two cars. And of course, you could requote them with their previous company, letting them know that they're going to offer X amount of money, and the option that we have is still lower than their previous company. So everything is connected, but it's important to determine if the information is the same as the information that they're giving us today. Now, also, you need to find out if they had any issues, any negatives with their previous company. Maybe that's one of the reasons why they stopped paying the policy, simply because they had issues with the company or the agency. And if they did, then you're gonna keep this in mind, and you're gonna incorporate that information into your presentation, and you're gonna emphasize on the fact that with us, we do offer quality service, and definitely they would eliminate those issues that they had with their previous company. Now, the following question, if their payment increased, you need to find out if their payment increased. For instance, if they're telling us they used to pay $70 a month, you're going to ask them, did your payment ever increase? Was it going up? And if the answer is yes, then find out, was it 70 and then it increased after, or was it lower and then it increased to 70? Because maybe they're telling you the 70, that's how much they were paying before, but they're not telling you the actual amount that was offered when it went up. Maybe they're paying $100 now. They started paying 70, now they're paying 100, and that's why the policy got canceled, but they're not disclosing that information. So it's your job to ask, to investigate, to look into the situation. Why? Because if their payment was realistically 100, we're going to use the 100 to evaluate the options that we have, not the 70. They were paying 70 at one point, but that's no longer realistic because they ended up paying 100, or the option that was offered was 100. So it's very important to determine if the payment was increasing. Is the option that they're giving us that they were paying, which is the $70 on this example, was that before it went up or after? And you're going to use that information to help you understand their situation and also to set up a presentation. Now, the last question is, why did the policy cancel? Now, you need to find out, you need to determine, why did the policy cancel? Was it because the payment went up? Was it for non-payment? Was it because they encountered a negative situation with the company, with the insurance company? They lost their job, or they moved? Whatever the situation is, you want to find out why. Now, you could use that information to benefit you, simply because it's important to understand, to know everything that has to do with their insurance policy, if they have insurance, or their previous policy in this case, if they don't have insurance. Why? Because the more information you have, the better presentation you're going to set up. Now, once again, it's important to ask all of these questions when they don't have insurance.